Hello everyone, welcome to another session related to Fusion Financials. Uh, in this session, we are going to discuss a new feature which has come up in Fusion Financials, intercompany cross charge. Uh, it's not very new. I think it must have come. I think 3 to 4 releases earlier. Okay. Now, the approach would be first we will discuss a business case where this feature can be used, and then we will do the transactions in application and see how our business case is mapped into application. Okay, so let's get started. So the feature name is intercompany cross charge. Let us take a fictitious example. Assume that an organization has operations into two different locations, one in US, another in UK, and so they have two ledgers. One is US ledger, another one the UK ledger. And business is like this, that they have hired a training partner which is located in UK. So for training for their employees, there is a central training department, central training vendor which is located in UK. So even if the training is given to a US employee, which ultimately belongs to US ledger, that training will be given to the UK in UK location. And that training gives the vendor provides the accommodation as well as the training program both. Okay. Now, in this case, agreement has been done in such a way that now vendor is not concerned the trainee is from US or UK. Or trainee for him, trainee is trainee, right? So the agreement has been made with the training department, the trainer, the vendor, and with the organization is that whatever training you give, send your invoices to UK since you are to the UK location of the enterprise. Since you are in UK, so send the invoice there. So invoices will be raised in UK ledger so that the trainer, training vendor can be paid. And then UK will settle it internally with its internal different country operation, which is US. So that is the complete business scenario. In these kind of cases, we can see that payment is done by UK ledger. Okay? In UK ledger, means by the BU attached with the UK ledger, but they are doing the payment for the services which were provided to US. Actually, expenses is from the US ledger. So it's an intercompany. And now, after recording the invoice, the UK ledger is going to do cross charge to US ledger. That is why probably the feature name is intercompany cross charge. Again, I don't want to go more into the naming convention, but this kind of scenario can be handled, can be mapped in this kind of by this feature. Having said that, now since let us first go with the business flow and then we will go to the what is the setup we need to do for this. So as I said, the vendor will be provide the accommodation as well as the training. So it's the same thing. So that's what I mentioned here, these two things. Now coming to this part. So the way after completion of the training program, vendor will send the invoice to UK business unit, right? So in UK ledger, there will be invoice created. So they will create an invoice where two lines will be there, one for training, one for accommodation. Now, since UK is going to create this invoice, which account they should pick while creating the invoice distribution or the invoice lines. So since this invoice is not related to UK expense, so they will be putting this into a clearing account. So training 20,000 clearing, accommodation 30,000 clearing. So accounting for this will be clearing account will be debited by 20 and 30, 50,000, and there will be supplier liability. The supplier liability will be paid off as per the standard invoicing process. I'm not going to detail of that. After happening this, now for these two expenses, these two invoice lines which is raised in UK are related to US. So UK is expecting money from US ledger counterpart that we have done expenses on your behalf. So UK ledger will create a intercompany receivable invoice, and the invoice entry will be intercompany receivable will be debit, and they will credit the clearing account which was debited here. By doing so, this is an intermediary account. This will get set up. Here it is debited. And here the same account will be credited. So since there were two lines, so I've created two different invoices here. In turn, there should be a payable invoice in US ledger where the actual expense will be booked. This invoice which was sent was an actual expense to the US ledger. So here in the US ledger, the training expenses will be debited and the intercompany payable account will be credited. So at the end, if you see, the expense is booked in the US ledger. In turn, there is an intercompany receivable to UK ledger, and there is an intercompany payable to US ledger. And again, there will be further processing of how do we settle this intercompany receivable and payable. There's a standard process of elimination, or if we do the invoicing, then we have to make a dummy payment and dummy receipt. I'm not going into that aspect because those are generic features for the intercompany audit. I'm restricting myself especially to this particular feature. So this is what the business case is. At the end, what we see here, there will be a payable invoice in UK ledger. The supplier to the payable invoice will be the training vendor. There will be intercompany receivable invoice in UK ledger, and there will be intercompany payable invoice in the US ledger. So this is what the fictitious business case I just picked up to explain this feature. Okay. Due to time limitation, I will stop here. And in the next part of this series of video, we'll continue from here and show how we are going to map this in application. Okay. Thanks for watching. Bye for now.